The Fed, yet again, did not cut rates, while inflation and GDP is rising and everyone is wondering what's next. I sat down with Stefan, the founder of Truflation, to discuss everything: inflation, interest rates, GDP, the potential firing of Jerome Powell. We even got to talk about the Manhattan-sized data centers AI companies are building, and what Stefan shared actually blew my mind. Make sure to stick around till the end. Enjoy the show. Stefan, I appreciate you taking the time and just coming on. I think it's a time to talk inflation. I think it's a time to talk inflation and cuts and whatnot. And as you basically just said, this is exactly what happened. So we saw on Wednesday that there was no change, and it wasn't really a surprise that there was no change, there was no cut, but still exactly what you're just explaining, that there is hope. But what is more interesting is that the probabilities of a cut for looking at September, October has actually dropped as well. So we're looking at 54% probability in September, we're looking at 48 in October. Yeah, what do you make of all these things? What's happening here?
Yeah, so I think there's no incentive whatsoever for Powell to influence and drive a rate drop, full stop. I mean, I think that's just it. And he's holding adamant to it. His same argument is unemployment and inflation. Those are the two targets he's got. And what's he doing with those? Inflation is still at their perspective, at least the old school, is 3%. And by the way, the Bureau of Labor and Statistics, which is the unit that actually calculates inflation, has less and less data that it's using and is just plugging in numbers manually in order to come up with a calculation that resonates with what they think is inflation versus what is reality. And you can see that they reduced their headcount, they had hiring freezes, they've had reductions in force, so they can't use all the consultants that they used to use to do the calculations for them in Excel spreadsheets on the side. And then ultimately, you know, they can't get the data that they need as a result out of that and do an accurate calculation. So we're gonna working with crap data that's saying 2.7%. And so he's got to bring it down to 2%, which is his target. And the employment data, which is also brought to you by the Bureau of Labor and Statistics, is equally fraudulent because they constantly go back up to 9 months back and revise the employment numbers downwards, right? So it's like...
Crazy. I knew I had to get you on. When we met, I immediately knew. What is interesting is 𝗙𝗂𝗯𝗀 had this post here, right? And it resonated with me. Like, forgive me, but I'm feeling sorry for the guy a little bit. And I want your take on this part. 𝗙𝗂𝗯𝗀 says, imagine being Powell right now, bringing down inflation from 9% to 2% while keeping unemployment rate at 4%. Stock, Bitcoin, gold, all-time highs, people demanding to resign. I mean, if you look at these from the past 5 years or whatever that might have been, from 2022, it brought down inflation from 9% down to 2%. Unemployment, exactly as you say. So is he politicizing the Fed? Is that what is happening here?
So what will Jerome Powell be famous for? I think that's the big question, right? What is his legacy going to be? And I think he's going to have a legacy of the guy that wrote, you know, that brought interest, you know, that called inflation transitory. Number one, right? And it wasn't transitory, right? He went all the way up in our calculations to 12%, not 9%, 12%. And so that's his legacy. I don't think he can shake that. And the other one, the guy that went up against Trump.
Yeah, exactly.
Those are the two legacies that he's going to be known for and remembered for. And yeah, I think he's happy with that by the sounds of it.
So you had a post here on Trueflation's X, and you basically explained that CPI is a lagging indicator. It's 45 days behind, and you're also saying that a lot of the data that even they get is fraudulent, whether it's coming from you know about unemployment or about CPI. So I'm just trying to understand. I think a lot of people are trying to understand if this is the case, why there is no cut. What are they actually doing at the Fed? Is he not cutting because that makes it, you know, for the administration more difficult to refinance debt? Is that what's happening? Or like, why is he not making the cut, and why are they not taking under consideration everything that the administration is putting in front of them?
Two things. I think one is its ego, right? His whole statement has been to bring inflation down to 2%. And based on the old data that they're using, it's still at 2.7%. So he hasn't hit the 2% target that he has constantly gone out there all the time, repetitively saying 2%, 2%, 2%. And so I think from an ego perspective, he does not want to crack that, and he does not want to break in that. Number two is political. I definitely think there's a political angle in here. I think he and Trump definitely don't get along. He is, he's been a Democrat. Why did he drop 50 basis points in September? It was very clear, 50 basis points, not 25 basis points, all the way back in September. Why was that? He shocked the market, nobody expected it, and he dropped it 50 basis points. That was to stimulate the economy so that just in time for the election, that possibly there might be a boost, right? And so I think that was, so that implies, to me at least, that there's some sort of political angle in this game.
Absolutely. I want to understand what is, so a lot of people are talking about inflation, but not a lot of people actually understand what truly is inflation. Can you just run us through, all these numbers, CPI, PPI, PCE, we don't have to go into specifics, but like, what are they actually looking at here? Are they looking at the increase in prices and how does that generate and how does that actually impact the Fed decision whether to go into quantitative easing or keep quantitative tightening?
So everybody earns a salary, and everybody has a portion of that salary go towards consumer spending, right? So consumer price index, it's where are people investing on a monthly basis their salaries, right, basically, and how much of their salary is being spent on various products. And so what CPI is trying to do is how does that spending change over time, and what is the cost change of those goods over time? And so ultimately you're spending it on food, you're spending it on transportation, you're spending it on rent, you're spending it on entertainment, insurance, etc., healthcare, all of these things. How does that move over time, year over year? And what we track is that number year on year. How are the spending patterns changing? How are the cost of goods within those spending patterns changing? And that is the calculation called CPI, Consumer Price Index.
I hope you're enjoying the interview. I'm sorry for stopping it for 2 seconds. I just want to let you know that I do have a channel called the 100x Club. What I do there is, one, a daily update so you can navigate the market and take trades as you will, but also very short informative videos within 5 minutes. And although I love these long form interviews, it is much easier to be up to date with everything happening in crypto in a 5-minute video. So if that sounds good and you want daily updates like that, there's a link in the description. You can check it out, subscribe to the 100x Club, and I'll see you there as well. Let's get back to the interview. What is the difference here? Why can it happen that on Truflation we see 2% while the official data is telling us 2.7? Where does this discrepancy come from?
So two things. One is the categories that we work with at Truflation is we have all of these different categories, which I can share. The Bureau of Labor and Statistics, which calculates the official number, uses some 60 to 80,000 items that they track. Truflation tracks 18 million items. We aggregate those 18 million items across 12 major headline categories. The Bureau of Labor and Statistics ramps their 60,000 items into 6 categories. And they bundle a lot of things together. And ultimately, we feel that they need to be separated out a lot more. We need to have more granular insights. Thanks to technology, we can do all of this. And so the Bureau of Labor and Statistics is still working with mainframe computers, COBOL programming language, whereby we're using AI, we're using Python and JavaScript and modern capabilities to visualize a lot of the data that we have. And so here you can see that, you can see the detailed breakdown, food and beverage, housing, transportation, and we just managed to break, sort of calculate this in real time. Every single day this gets updated versus once a month when we sit down in a meeting room and try to cram through the last 3 days of the end of the month. What are the numbers finally going to be? and then realize that, oops, we forgot these numbers and those numbers, and that's why we have to go back and then change the numbers again.
So do you think it's even possible for the Fed to get to 2% with the current system that they're having?
Nope. I think those days are gone.
So
We say 3 is the new 2.
3 is the new 2. It's interesting. 3 is the new 2. So then that raises the question: what happens next? Because the tension between Trump and JP is obvious. JP, even though Trump is saying that JP is leaving very soon, that's May 2026 soonest, right? Until then, he's in office. What's next? Like JP saying, it's although the Fed now with the latest report on Wednesday, they actually said that uncertainty diminished, but there's still this uncertainty regarding the tariffs and what is really going to happen. Is tariffs taking or increasing inflation? And you had a very interesting take on that as well. So I want to touch up on tariffs, and then also I want to talk about really what's next. Like how do you see the trajectory? Let's talk about tariffs first. Is this true, or is this just something that Powell's hanging on to, that he believes the tariff uncertainty will increase inflation in the long run?
So the same guy that called inflation is transitory also is now hiding behind tariffs is inflationary, right? And so I'll leave it up to the audience to decide who you believe. You have a group of some 2,000 different economists at the Federal Reserve that are all PhD grads that Scott Bessent calls unaccountable and under UBI. So they're just taking a salary, but they're never held accountable, and they've never been accurate. They were inaccurate in defining inflation only being transitory, and now I believe they're inaccurate with saying tariffs is going to cause inflation, and they're hiding behind the narrative that tariffs are going to be inflation. Tariffs will not impact inflation. I think it will be absorbed by the supply chain, and the consumer won't accept higher prices. And if you look at it, tariffs in important critical materials are still kept at very beneficiary rates.
So how do you see the trajectory? What's next?
Yeah,
for
good
Powell,
question.
for cuts?
So cuts, unemployment is really going to drive cuts. I think that is what is going to drive decision. Is the economy really humming? The transition that's taking place right now, we need energy, right? You look at what Trump's policies now all about, it's all about energy. How do I bring the lowest cost of energy to market so that I can build out this super intelligence center that Meta wants to build out? And think about it, that intelligence center, that AI lab or center, and it's not only Meta that wants to build it out, it's ChatGPT, which is building it out with Oracle and SoftBank. It's Meta, Grok building it out, right? So you've got all of these data centers that are rolling out that are the size of Manhattan. So
it's actually wild to think about it.
Infrastructure that's going to have huge energy requirements. And the cost of energy is what's going to drive the adoption of AI. China is way ahead of anybody in the rest of the world with the amount of energy that is coming online on an annual basis. Surplus energy, right? So growth in energy creation and production. And so if that's the case, AI will come online. We need to have a huge transition of employment from the existing legacy businesses into new AI-driven businesses. What are those jobs? We don't even know what those jobs are today. But we will find out what they are tomorrow. Microsoft did a report that highlighted where the jobs most at risk and the jobs least at risk. And they're saying it's mostly white-collar workers, right? So people that are laying the roof tiles, they're less likely to lose their job over the short term, right? And so how do we transition people to go back to that kind of work or to grow in those categories, to go and help and support infrastructure, energy? The whole energy industry is in huge capacity. You look at Schneider Electric, a leading transformer developer or electricity manufacturing equipment manufacturer that actually supplies all the transformers, the cooling, all the needs that you have in a data center. They are booked out, sold out all the way through to 2030. And they won't negotiate on price. And it's like NVIDIA. You can't get the chips. You can't get the transformers that you need. And so what does that mean? How many more companies are going to go into that market? They see a huge opportunity. So they're not only going after the chip sector, they're now going after the energy sector as well. And so there's going to be a huge growth. There's going to be a transformation in that. There's going to be a cost of transformation. There's going to be unemployment in legacy industries. So how does the Fed deal with that? The Fed is obsolete. The Fed will be no more in 2-3 years. And I think central bankers will be no more in the future.
What do you mean? What do you mean there will be no Fed, there will be no central bankers? How does the future look like in 3 years?
It's going to be managed by I think the Treasury. The Treasury in the US will take over control and work through the OCC and with the banks directly to decide how and what more money printing, less money printing, right? Interest rates don't drive the economy anymore. It's such a lagging, all it does is feed the financial services industry by allowing them to play with interest. But it doesn't actually drive the economy. And as Besant puts it, Wall Street is going to Main Street. So we're focusing on Main Street. And so who drives Main Street? It's the local banks. So how do I work with the local banks? And the first way to do so is allow local banks to mint their own money. And what is that own money? It's digital stablecoins. How do you mint digital stablecoins? Buy government bonds. You buy government bonds, you can mint as much as you want. I'm the Treasury, I need more money, I'm issuing government bonds, you buy it, you can mint more money directly to your customers and lend out however you want, and you get to keep the interest that I pay you directly. And if you don't want to buy it, you don't need the money, then of course I drop the interest rate. But the Secretary of Finance actually drives that. The Treasury Secretary actually defines when they need more money based on the budget that they have.
It's actually super, you touched on it. Yeah, you touched on the point. This is why Trump's is genius with the whole genius, right? The Genius Act, right? So it's it is exactly. Okay, amazing. So, but I still want to kind of understand what your thinking is for the next. You know, we as a lot of people think, is it bull market, bear market? Are we going to see a pop here? Are we not going to see? Is this going to be down only until May? So how do you see the economy performing until? So also one step. Until Jerome Powell leaves, right? So until May, what are we looking? He probably not gonna cut. So that, or do you think he's going to cut?
So if you look at Polymarket, so we're heavily involved. So all of our data is now put onto the Truth network. So we have a decentralized blockchain built on SQL databases. So you have all of these data sets that we now have are put on chain. Why? Because we believe prediction finance is the new internet capital market, right? And so if prediction finance is important, let's go to Polymarket and have a look. Will we see a rate cut in 2025? The odds are...
It says 75%. It's a 75%.
Exactly. So you put in $10, you'll get $40 payout. So my view is that we're less likely to see a rate cut this year. And I think Powell is going to be standoffish as long as he possibly can and rally enough of the FOMC board members to stay on his side so that he won't need to do a rate cut.
So would you take this bet? Would you bet on no?
I have already bet on no. So
I mean, if you're betting on no, I have to take a bet here as well. Okay, so not this year. But what does that mean?
So going on to that market, you go back, if you looked back at if there was a 50 basis point rate cut in July, so yesterday, had he agreed to doing what he did again in September, surprise the market, shock the market, do a 50 base, you would have gotten on a $10 bet, you would have gotten $3,000. So, you know, you can play the odds.
Yeah.
And to me, this is a much more interesting market than going and buying a lottery ticket.
Yeah, no, I agree with you. Prediction markets, I absolutely understand. So what do you think about, not this year, what does the market do? Is it up only without a cut?
Money printer go burr.
This year?
Yeah, this year.
Without a cut?
Without a cut.
Why?
Well, number one is we need to roll out infrastructure. Number two, we have the Genius Act. So the money printer will go burr in the form of digital currencies. So you're seeing all the banks, Amazon, Walmart, they're all going to be issuing their own stablecoins. They're going to be using their treasury to buy bonds. And so ultimately the bonds will allow them to print their own money. Digital currencies, stablecoins printed by all these institutions are going to be backed by dollar, 1-to-1 to the dollar. So you can actually just trade. It's no different to credit card money. It's how do they process it? How do they build systems to then allow them to automatically swap them out? But now you have these new banks, Coinbase, Kraken's going public, Circle. All of these will allow for swapping and trading of the JP Morgan coin with the USDC, with the Amazon coin, with the Walmart coin, with the Bank of America coin, whatever coin you have, but they're all dollars.
Yeah, but is this money printer go bro? It's not the same that what we've seen in after the COVID era. So it's a different kind of money printing that does not necessarily impact the market directly. Do I understand it correctly?
No, I mean it will impact the market way more directly because you and we need a loan. Where do I go? I go to my local bank. They give me a loan. They'll give it to me in stable coins.
Yes, but would I want a loan at 4% interest when I'm expecting a cut next year?
That's up. But do you need the money? If you look at right now,
I mean, the infrastructure we will have. I agree with you, right? Because stable coins will obviously bring more liquidity. But the question is, will anybody live with it when I think, and again, like you're the expert in this, do you agree that everybody's waiting for a cut? Is that a thing, or is that only us crypto bros sitting here waiting for a cut?
No, I think everybody's waiting for a cut. Small, medium businesses waiting for a cut. They need to finance their businesses. There's definitely, consumers.
So everybody's sitting,
everybody's
waiting
and waiting. Yeah.
So like, what these next 8 months look like in this waiting? Is that stagflation? Because GDP is up 3%, right? So like, is this stagflation? Is this like what is going to happen in the next 8 months for the markets, for businesses, for the economy, for the everyday people?
So we think stagflation, right? I mean, look at what Powell said. I mean, in his statements, he does not believe the 3% growth. He was saying the economy has slowed down. Ultimately, he's looking at the first half of the year. So he's taking the first Q1 and Q2 combined, right? And so Q1 notoriously always after, there's a hangover from New Year, the big end of the year, so people are working out their budgets and finalizing everything. So Q1's notoriously bad. Q2 is generally always pretty good. Q3 is really good because you also get the summer holidays in there. So people are spending. And so we'll see what Q3 brings about. But the economy, based on the BEA, which is another department within the government that calculates GDP growth, they're seeing growth. And the growth is coming from certain pockets. The Midwest is not growing, right? And so you can see in the breakdown that the Midwest, the large portion of the land mass, is not growing. California see growth, New York you might see growth, Miami you see growth, maybe Texas, but the rest of the country is not yet really growing. And hopefully energy will change that metric. That's to be seen.
Do you think Bitcoin and the markets continue making new all-time highs without a cut until into May?
Yeah, because where am I going to go? The dollar is going to get diluted, and it's going to be, I think we're going to see a separation of money. What was money do? A store of value and a means of exchange, right? And so if you look at those two, I think the store of value is going to be separated from money, and money is going to be purely used as a means of exchange for goods and services. And the store of value is going to become Bitcoin. And the means of exchange is going to become dollars.
Yeah, it already is separated for a lot of people, right? Like money is like, it's not, a lot of people stack cash under their mattress, not understanding that it inflates 20% a year or whatever that might be. Yeah, okay, interesting. So, and then what do you think? So if the market, so because I have a theory, I believe that we are going to see, going back to stagflation as well, I believe that leading into Q3, I think we can see a boom, but then leading into May in 2026, I believe we have to have a pullback. And the pullback not necessarily in crypto, but in general in the markets, because everything is overheated, everything is up only, the tariff uncertainty is behind us, Trump's first year basically done. And I think that exactly what I was trying to ask you is that people gonna sit and say, do I start taking loans out now and start investing in risk assets, developing my business, or am I gonna wait for May, where I know for certain that the rate's gonna be cut in half when Trump's new person gonna be put as a chair of the Fed, you know? And then that 6 months or 5 months could bring a pullback. What do you think about that?
So there's one thing called refinance, right? So I can always go and take out another loan at a lower interest rate and pay down the loan that I took at a higher interest rate. Number one. Number two is, look at the money printer, Fefe. I mean, if you see all this money coming online, where is that money going? Where will people be putting that money? If you're getting 4% and the SPY and inflation is still, according to government, 3%, that's 1% real interest that you're paying. And if I have 1% real interest versus a stock market that's going up 15%, people are going to be taking out more and more money. And we know money supply is still growing.
Yes.
And it's not going to slow down, right? It's not just the US, it's China's growing money supply. It's Europe is growing money supply. Latin America, everybody's growing money supply. So as that actually piles on, that goes into assets, because people don't believe that currencies is the place to store it. I'm going to store it in assets, and some will be digital assets, some will be raw materials and commodities, and some will be equities, right?
Incredible, incredible. So what happens in May? As a last point here, JP's out, Trump's new person is in. What happens?
I mean, we'll see. Is it going to be Waller? Who's it going to be? And I think that we'll see a quick rate cut, largely because the cost of capital is hitting the P&L. And so I think what Bessent wants to try and do by dropping interest rates, they can refinance a lot of the loans that are outstanding, and as a result get longer term commitments. And with longer term commitments, my cost of capital drops, and that the cost of capital is a P&L item, and that hits the budget. And if I can bring down my budget by just reducing interest rates, I can then prove to the market that, look, we're saving costs, and it's just capital costs that you're saving, not operational costs.
So you think, so I'm just trying to understand what you're thinking about the market. Do you think that from basically today on, ultimately it's up only throughout the next year, 2 years?
I think at least for the next three months, 6 months, I don't see any big change until, maybe towards the end of the year, people will be considering tax write-off. Yeah. So there will be a correction around, I think, the December element. Do I capitalize? Do I capitalize on my money? Do I take profit? Or do I roll it over into the new year? There'll be a whole level of tax decisions. But now, will crypto be exempt from tax and capital gains? If that's the case, that's going to change the ball game overall.
I agree.
And I think for the first time, we've got a president that is super pro-crypto. We have a Treasury Secretary. Look at the video he just put out yesterday. I mean, it's all about crypto. We promised you we'll make America the crypto capital. And guess what? How do we drive more and more? Provide tax benefits. And that's going to accelerate the adoption of crypto. And by providing, look what they did in e-commerce. Remember, you could buy, when e-com came out back in 2000, I think, when the web.com boom was happening, Amazon grew out of the fact that it didn't have to charge sales tax because it was doing internet sales. Everybody else, if you had a physical shop, you had to charge sales tax.
Wow, interesting.
Incentives, that drives adoption of new technology, e.g. e-commerce. Now, if we see tax benefits to crypto trading, crypto capital gains, all of a sudden we'll see huge adoption of treasuries going into crypto asset classes. And that is going to be super exciting.
Stefan, I always appreciate talking to you. It's always great stuff. I know that you people can find you in Trueflation, but we're also going to include your X link or whatever link you would like to push out. We're going to include all that in the description, guys. Check out. And any final thoughts from you?
No, I think that, I mean, I'm excited. It's definitely challenging. It's not going to be smooth sailing, right? Change is always bringing about disruption, and we will go up and down, but the overall movement is up, right? Every time there's a small little correction, it's brilliant because it resets at a higher level than it was before. And so we want rapid corrections because it helps us on the journey upwards. And yeah, it cleans out some of the things in the hype and holds everything in contention. We do love the 100% gains, but overall, over the course of 12 months, we might see things like that.
Incredible. These are what we call bullbacks, not pullbacks. So bullbacks are for buying. Stefan, appreciate you so much. Thanks for being here. Thank you so much for watching. If you have enjoyed this show, let us know in the comment section. If you have any questions, we're gonna be in there as well. Share it with your friends, whoever need to see it. Smash the like and subscribe if you have not done already. Check out this video, which was about MiCA compliance and how you can navigate within the EU, and come back for another one. Thank you so much for watching, and I believe I'll see you in the next one. Take care.